Howdy, Jacob here. Today we're looking at NL Industries. So $270 million market cap, $124 million enterprise value. Very, very small company. Currently showing a 5.17% dividend yield. That enterprise value tells me they have net more cash on hand than debt. And we can see that they have only $1 billion long-term debt and $69 million in cash and cash equivalents, plus the $70 million in short-term investments. So they're rocking about $139 million in cash and very liquid products, with only $1 million in debt. So that's very safe to see. Very safe balance sheet. 5-year average free cash flow, let's say, is about $20 million. And this dividend of, 5.2% roughly pays out $14 million. So very large chunk of their free cash flow is going towards dividends, which, if they don't have a lot of growth potential, is fine, but just a little strange that a $270 million company might not have a lot of growth potential. I guess I don't know the size of this industry, commercial services and supplies. So the company manufactures and sells mechanical and electronic cabinet locks and other locking mechanisms. Yeah, I guess I don't know the size of that industry, but it's interesting to see that they are not reinvesting more, which honestly is not unsatisfactory since their return on invested capital is as volatile as it is. Gross margin pretty consistent, 30%, and then operating margin is now positive after being negative for between 2013 and 2016. I think I'm ready to start making some assumptions here. So 92 million in 2013, 167 million in 2022. Looks like there really wasn't a whole lot of growth before then, and I might stick with a 3% revenue growth. Say they grow roughly with inflation. Maybe some of their products are busts, but for the most part, they'll be able to grow with inflation. I think that that's reasonable. 13p, because they're not a huge company, so there's always a chance of them getting consumed by a larger company, or a larger company just doing what they do for cheaper through scale. And so margins, let's see, very pretty volatile margins here, 32%, 14%. I don't like that their earnings for the last 4 years have been higher on average, but their earnings have been higher than their free cash flow on average, but it's nothing too concerning. Maybe I'll do 16, 14, no change in share changes. I think I'm fine with this dividend of 14 million payout. They can afford it, but I'd really hope that with their excess free cash flow, they're maybe able to buy back shares at cheap prices or reinvest back into the business to inflate that share price through the company growing. And so I think if we look back at the stock price I'm projecting to get a 15% return, we're saying that the company's stock price would have to fall 26%. As for this dividend yield, they don't have a long history of dividends. It looks like they've only been paying a dividend since 2020, so that's not exactly what you want to see for a company when you're trying to get some excess cash flow consistently, or if you're retired trying to make money off of dividends. But for me, it's something that they can easily afford right now, and a 5% dividend yield is pretty substantial. Before going into it, though, dividend companies are usually a lot bigger since they're usually at the later stages of their life. I'm not saying a company that's 270 million might not be at that stage, but this would definitely be something I'd look into because it's just so small. And the last thing I'll look at is insider ownership. Let's see, 83% held by insiders. All right, so that's a pretty substantial amount and pretty good indicator for the company doing what's right for them. It's so interesting that it was founded in 1891 and it's still as small as it is. But yeah, I think this could be a very good company to put on your list of things to look at. Just wait till it gets to a price that's more attractive to me. That's what I'm going to do. If you do your own analysis, hopefully it comes up to a price that you're comfortable with, and then when you do your research, never invest in something that you're not comfortable owning with or dealing with and looking at and understanding the business and such. But for me right now, yeah, it looks like a great company. I'm just going to be waiting for it to get to a more attractive price. Thank you, and have a good rest of your day.